Morning, everyone. Welcome to another weekly price action journal review. However you best frame one of these sessions. So typically, I tend to do this either on a Saturday or early Sunday, and it's Sunday in the UK today. So that's when we're going to commence this. Had a busy Saturday, so Sunday. First thing, one of the important tasks to complete. It's also important that you have done your weekly ASR. Typically, I do that on a Saturday, and that will be a video that I will post soon regarding sort of like your weekly reflections and things that you need to take into account. Again, all of these processes are intentional. Every process that I accomplish during the week is intentional, and they all feed into either another master process. So in essence, they are subordinates of a master process, or they are the process, but they all elicit improvement, and that's what's super important. And this is one of the most important processes that you should aim to complete and accomplish every week without fail. I've said before, it's how you're going to unearth improvements, areas that you may be weak, and fundamentally where you're trying to get to is a methodical, mechanical trading model that you can execute consistently without any concern of the outcome. The process is in your control, the outcome isn't, and that's why this is important. So without further ado, let's get into this. So the first thing for me, I'm starting on the weekly chart, and I've annotated this level here. So for me, heading into this week, I was anticipating a continuation of higher prices, certainly initially anyway, because I wasn't convinced about this purge of this high. I felt that, we could have engineered, and there could be a lot of buy stops resting above here based on this price action, that when we come to purge, I want to see a deeper run above there. So for me, excuse me, it was certainly a case of anticipating or certainly seeking higher prices. Plus, with institutional order flow, very much bullish to the upside, which we'll sort of detail on the daily time frame. But ultimately speaking, just looking at the weekly chart, yes, we had S&T at the lows, but that's what I was looking for heading into this week was a continuation of bullish price action to a certain point before we may see a level of rejection. Okay, so I'm just going to detail now. So we're doing this in the raw form. Nothing has been done like I did last week due to other circumstances. So ultimately, we can see that Monday, Tuesday, and Thursday, all of which had high impact news, with Thursday being the day in which had the most accumulated US dollar high impact news. Therefore, for me, Thursday was going to represent the likely high or low of the week. Okay, that's how I would be looking at that, and potentially, just a continuation of higher prices through the high impact news on Monday, some on Tuesday. Although I typically tend to look at Monday as a consolidation day, but that doesn't mean that wouldn't be the case because of the high impact news on that day. Tuesday, obviously no news on Wednesday, so I would be looking at some real stagnated price action on Wednesday, and then we had obviously unemployment claims, final GDP, and Fed Chair Powell speaking on Thursday, so that would have prompted some volatility into the market, and that's why I would have been looking for the high or the low of the week to form on that day, and then likely Friday to trade back into, depending on the expansion from the week and whether any high time frame objectives have been hit. Friday would either be a continuation to that high time frame objective, but if it had been hit and we've seen a level of accumulation of orders, so let's assume that the initial expansion of the week was lower, then we would want to see an accumulation of buys below some form of low. Or if it was the expansion was higher, then we'd be looking for an accumulation of shorts above some high, and then Friday would be that delivery back into the range. Okay, so I'm just going to take a quick snip of the economic calendar. You want to make sure you've got that detailed in there, just so you can reference back to that at any point in time. Okay, and then we're just going to put some text based on what I've just said. So based on the economic calendar, I was anticipating a bullish week with the high or low likely to form on Thursday, as this represented the day with the highest number of red folder events. Okay, so really simple. But we can see where we would be anticipating volatility injections based on the economic calendar. Okay, so I'm going to move down to the daily, which is where things are really going to commence. What have we got here? What am I after? That one. Previous weekly high there. Okay, and there isn't a lot based on, in my opinion, excuse me, based on the weekly, on the daily, as it pertains to ES. Again, for me, I was anticipating higher prices, which we could see occurred Monday, Tuesday, Wednesday, purged higher above the all-time highs, and then targeting so we can see that the weekly objective was likely the previous week's high, traded above it, and then traded back down into the daily range. So we're going to put some text here. There's not really much, depending on what your trading model is and how you analyze price, you might reference the bullish order block here, the proportion block there. It depends on what your model is, but for me, the only thing of real significance to me are these upside objectives on the daily. The 4 hour is where I'm probably going to start getting into the weeds a little bit in terms of high time frame, PD arrays, and framework and context. So from the daily standpoint, so following last week's price action, I was anticipating a continuation of higher prices to see a deeper purge of the all-time highs, the old high, all-time highs. Okay. I was anticipating this to occur during the early part of the week, although with seems I can't spell with Thursday having the highest number of red folder events, this move higher could occur then. Okay. The high time frame drawn liquidity would be the old high, previous week's high. Okay. Which would coincide with NQ running into its high time frame, its SIBI. Okay, so that's the alignment. So we know that NQ wasn't at its all-time highs, but we know ES and YM were. So for me, the run higher was more predicated on the fact that I was anticipating YM to trade up into its SIBI, and actually slash BPR, because there was an overlap in BPR on the SIBI. So you can go and check that out on your charts. On NQ, which for me, if price was going to go lower, that's one of the areas that it would likely meet a level of resistance. Okay. So yeah, okay. I would be looking for some form of cracking correlation at the lows to support the idea of higher prices. With then an opposing high time frame crack correlation at the highs to confirm the high of the week. Okay. This did occur. Excuse me. I believe this occurred on. I believe it occurred on. I believe it was Wednesday, Thursday, or Thursday, Friday. Thursday. Let's put Thursday, Friday for now. We can always come back to that. Okay. Cool. So IOF and ISS remain bullish, supporting the idea of higher prices. However, the market did consolidate, indicating we could be seeing some form of retracement heading into the latter weeks. Okay, so that's my analysis from the daily time frame. Bullish, upside objective. That's what I was looking at. We're going to take a copy of that, like so, and then you just want to paste that screenshot into your journal. So we're going to drop down to the 4 hour. action. Jesus. Good grief. So let's just widen that a little bit. Let's start off with my fundamental processes. Okay. So the first thing for me that I typically tend to do is, that's my weekly ASR. So again, you always want your model, if you don't know it off the top of your head, which you should do, you always just want it to hand so that you can see some of the, not so much your model, but the foundations of your model in terms of how you determine a potential trade idea. You want that to hand because that's what you want to be plotting from a top-down approach. Okay. So the first thing important to me on that true week open, which is there, excuse me, and I've often said to me that that is a strong delineator of true premium and discount. Doesn't mean you can't buy above that level. If market structure, various different confluences occur that support a trade idea, you can, and you'll probably see one in this analysis. But it does provide me with a filter to some extent for certain models versus others. Okay, so low, we've got low of Monday, low of Tuesday, low of Wednesday, and low of Thursday, and then we've got high of Monday, that wasn't a high, I don't believe. I categorized that one as a high. No, it didn't, because that was purged by that, and that wasn't a high because we had well, this one was higher, so there was nothing there on Tuesday. Headed into Wednesday. Wednesday's high was here. Thursday's high was there, quite obvious, and we don't need to do anything for Friday. Cool. Right. So we're just going to now not do that. We're going to annotate the let's give it a bit of room. Yeah, let's go to there. Okay, so this was one. So again, just to remind you, this is the process I undertake in its rawest form. If you watched last week's, there was elements of that in terms of the chart annotations, which were pre-done just because I had done the weekly review earlier, because I was busy, but then I came and narrated it a bit later, which I still think worked out pretty well. Anyway, so we're going back to the raw form this week, so hopefully you enjoy this, but do let me know if you prefer this way of doing things versus the one from last week. We can always keep changing it up. Okay. Now, that's a good question. I'm going to actually I always get caught up on this. I don't know why, but I do. actually, do you know what? No, we're going to do it. We're going to do it this way. I want to see these key levels this week. I change my mind about this every week, but let's do it this way this week. So H4 is a very important time frame to me. It kind of beds the foundations for a number of oops, made a mistake there. Number of my trade ideas. So that's okay. Right. So we've got these now. I think that is actually fine. Yeah, okay. Happy with that. Some obvious. Let's just finish with the liquidity pools because there were some key liquidity pools that. Excuse me. I believe we have. We'll double check that in a second. Okay. Do that in a second. Yeah, let's just overlay that. Just to double check this. Okay, here. Yeah, yeah, we did. Okay. Excuse me. I think, yeah, I think that's that. Okay, so we've got let's put that there. Excuse me. Okay, so we're on the BISI down here. And I believe there was one more which was in here. Okay. Right, and then we've got we'll do the hourly one. Excuse me, shortly. Right, so was that the key? That was a couple of other bits. That there. Okay. That was that. Okay. There. And I think for the H4, that was about all that I was really viewing this week. Yes. Okay. So let's put some narration. So, as detailed on the daily commentary, I was looking for higher prices on the week. Okay. Yeah. I had noted the support at the lows at the BCH4 during Monday. During Monday, supporting the idea of higher prices. We then had the SMT at the lows with NQ confirming likely higher prices, but that's, yeah, I remember now, I missed one. It was that one, that's why that one was important. That was the target. But also at the same time with this, this is where I was anticipating the run above the previous week's high. Didn't occur, but it eventually did occur. But this was where I really wanted to see that. Targeting the old high H4 and then the previous weekly high as it was in close proximity. Okay. Okay. As the market did not purge the previous weekly high, I noted the choppy price action during Wednesday. Apologies, I've missed something here. We had the high time SMT at the lows with NQ forming below the true week open. Confirming likely high prices. Yeah, okay. So back to Wednesday. During Wednesday, yep, okay. So as the market, so as the market did not purchase previous high, I noted the chopper price action during Wednesday, where the market traded down below the true week open before finding support and displacing higher to the previous, let's put the high time frame drawn liquidity, which was the previous week's high. Okay. Thursday continued the displacement higher, which aligned with NQ trading up into its BPR H4 before the market rejected. Now, let me just double check. I'm sure there was SMT at the highs. Yeah, I'm pretty certain that there was SMT between Wednesday and Friday. Now, I don't like SMT that overlaps, but you know, it is what it is. This rejection was supported by the SMT at the highs. Before the market rejected lower into the BCH4. This then set the stage for further PDA SMT at the BISI with YM supporting the idea of near-term higher prices. Okay. Heading into Friday, I noted the BPR H4 as a key PDA, or should we say premium PDA, in which heading into Friday, I noted current price action above the true week open, supporting the idea of lower prices, especially as we had observed, can't spell, SMT at the highs previously. I noted the BPR as a key PDA rate in which should we want to see lower prices, this PDA would be respected. Okay. I noted the PDA SMT at this PDA supporting the idea of lower prices if confirmed by lower time frame, LTF confluences. Okay, so that is the H4 analysis in a nutshell. Okay, we've detailed the key things that we were looking for during the week, and that is as detailed as it needs to be. Okay, like I said, if your main time frame is the daily, then that needs to be one of the focus points. Now, the hourly is obviously where even more detail ensues, although we've covered a lot, to be fair, in the H4. So if the daily is your time frame, or if the weekly, or what have you, then that's one that you really need to focus and double down on. Okay, so we're going to drop down and clean up some stuff. Let's just get that a little bit wider and a little bit higher. Perfect, like that. Okay, there we go. Let's just clean up some of these levels. Okay, remember, guys, you want to enjoy this process. This is where mastery happens. And look, by no stretch of the imagination am I a master or anything of that nature, but you need to determine which processes formulate part of that category of important and urgent, and they're the things that you need to ensure that they get done. Now, not all processes are you going to enjoy, but the more that you enjoy through the art of learning, the more enthused, the more detailed you will be when it comes to when it comes to carrying out this process. And the more enthused you'll be when you get certain aha moments, the light bulb moments, whatever, however you want to frame it, because you can see areas in which you can improve, and that's a real benefit. You know, it's a real it's a real nice moment to have, but you've got to be consistent with it. That's important. You've got to be consistent with it, and the more consistency you can show in doing this, and evolve. You don't have to. It's not a case of, oh, you know, stick to the same thing consistently, but you know, you want to evolve when doing this. You want to find ways in which you can improve your analysis, and just make sure that each time, you know, not each time, but there's a level of involvement in your attention, your focus, and all of those things. So really important to do, and that's why, like I said, a lot of this channel is predicated on the art of journaling. Right, so we are now. So I remember I had this key price level there, which I had missed, so it was important to put that in. Right, so let's get into the crux of this. So we'll do liquidity pools first. So again, things that are important in your model, you want them there. Now with liquidity pools, some will be referenced H1, some will be referenced by the session name. Sort of depends. But the key ones, as you can see, are the H4. Okay, so just going to, yeah, I'll just do them like this. Actually, let's do them the other way. See, again, I'm changing my mind. But it's not that important. Okay, right, so concentrating on where things occurred. Okay, heading into Wednesday. Wednesday was not a day in which much really happened, if I'm being honest. So we're just going to mark up certain things that I would typically mark up in the morning. Oh god. But that it wouldn't necessarily elicit a trade model, but they're just levels that I personally like to look out for, because they're triggers for me to determine whether something may occur, may not occur. Okay, and then Wednesday, purge. Sorry, heading into Thursday now. We purged that. Market moved higher. Now Thursday, I was not in front of the old charts. Like I say, sometimes family stuff takes precedent, and everybody will have certain important things that takes precedent in their life, and it's important to ensure that you remain true to those things. Right, let me take a quick little swig of coffee. Okay, let's see how we're doing. Not bad on time. Okay. And then here, again, I'm just marking off key levels that typically when I come to the charts, they are important to me. They're just triggers. They don't necessarily yield anything. But they're factors. I think there we go with that. Now, were there any... let's have a look. Sorry, I'm just thinking. Just making sure I've captured... everything that I would naturally have seen. Support there. Okay, let's just okay. Okay, yeah, happy with that. Happy with that. Okay, so Monday, 9 o'clock. Thursday, even 8:30, somewhere there, maybe there. And Friday was 8:30 there. Okay, cool. Happy with that. So even regular viewers or anyone who's seen my content prior will even have noticed that even I've evolved in terms of some of my annotations. Right, okay, next final phase. We're going to analyze very briefly the daily charts. Okay, so Monday, so the market opened and immediately repriced lower down into the BISI H4. CH4, which formed the low of the day. Okay. The market rejected and repriced higher. Consolidating for the remainder of the day. Well, actually, in fact, consolidating whilst also forming the high of the day. Before returning back into the range. Before the close. Okay, that's Monday. Hang on, this engineered a liquidity on both sides of the market. Heading into Tuesday. Okay. Right. So Tuesday. Okay. Tuesday. Now there was I want to say that there was some tea in this area here with yeah, but primarily let's focus on the main move of the day. Okay. Right, so Tuesday the market opened and immediately repriced higher. Priced higher, where are we? Tuesday, during the London session. merging the previous day's high, engaging the buy stops, resting above. Okay, yeah. And this purge, this occurred on all three members of the IFT. Okay. Cool. So out my spelling mistakes. So as I said, there was well, in fact, why don't we just let's go and marketing. Right? Let's go and do that. Let's go and see it. So we're looking at between it's important because it did actually yield a trade idea, so it is important. Oh, wish you could do that, but you can't. That's fair enough. Let's get these like that. Where are we? So we are right, where are we? So God, where's the days? Oh, it's 'cause I'm on the right, so we're looking at that high and this, there we go. That's what we're looking at, that there. So we can get that off, back to the hourly. There you go. So we'll annotate this and we'll document it. It's important for completeness sake. However, I noted the high time frame SMT at the highs with NQ, which, oh God, my chart's all over the place. There we go. Which initiated the move lower, targeting the old low H4. The market then formed high time frame SMT at the lows. With NQ also at the BCH4 slash BCH1 before displacing higher targeting the old high H4. Okay. Sorry, I was kind of waffled a little bit through that. I was just trying to get my bearings back. You kind of want to get into that flow, and I sort of took myself out of the flow briefly. So getting back in flow. Back in flow. Right, so Wednesday. Let's get this narration in. Okay, so Wednesday. What did occur on Wednesday? So Wednesday. The market repriced lower, wicking below the true week open before repricing higher. Let's take that out. That's not correct. Okay. Purging the BSL H1 from the previous day. Okay. Previous day and setting the high of the day. That's better. Okay. Now that run, want to compare. Want to get YM up, because that's the one that has been. Yeah, okay. Right, okay. So we can just amend that. We can below setting the so the market repriced lower, wicking below the true week open, where I noted low time frame SMT. With YM before repricing higher, purging the BSL, yeah, from the previous day and setting the high of the day. Yeah, perfect. Okay, perfect. That's what we. Okay. High BSL from the previous day, which aligned with the previous day's high for both NQ and YM. and setting the high of the day. Perfect. Okay, so we're here. And then the market rejected. Rejected after purging the highs. Repricing lower. Seeking the liquidity below the SSL DN. Cool. And then obviously it starts initiating this price leg higher. Before initiating the price leg higher to close the day. Okay. Thursday should be a little bit more easier. Okay, so what do we see? Thursday, the market displaced higher from the open. Before a small consolidation which formed the BSL LDN. Okay, so let me just recap Thursday. So the market displaced higher. I'm going to put from Wednesday, purging the previous day's high. And then continuing higher before a small consolidation which formed the BSL London. Right? Okay. The market then purged the BSL LDN liquidity pool before confirming the high time frame SMT. With YM, whilst also setting the high of the week before displacing lower. Into the BCH4, setting the low of the day. I then noted the PDA SMT with YM, which formed the basis of near-term higher prices and what we could see here, I'm just going to I'm sure, yeah. Okay. Targeting a premium imbalance closing, before close of day. Cool. So we've captured the two, got some correlation. Now we head into Friday. Okay, so let's get Friday in. Let's see what happened. So the market opened above the true day open and true week open. Oh, before repricing. God, I can't spell. Pricing lower to set the old low H4. Okay. Yeah, 4. Market then repriced higher, purging the BSL London and trading up into the BPR H4. Whilst also purging both the old high H4 and the BSL H1. Okay, this set the stage for PDA SMT. With YM. With the market respecting BPR H4. Market then confirmed PDA SMT before displacing lower, targeting the old low H4 and resting sell stops below. Okay, and that closed out the week. So there we have it. Okay, so there we have it. I'm just going to let's get rid of that, and I just want to capture the hourly chart again, just to overlay the one that I had before, because there was a few little oh, hold on, let me delete that. There's a few actually other bits that I haven't there we go. So double confluence there. Take this, paste that in there. So then the final things that you want to do is takeaways from the week's price action. Okay, you want to you want to oh, I've just copied that and I still don't even have Monday in there. What am I doing? That's better. Copy that again. Yes, you want to take your key takeaways from the week, things that you've observed that can improve and enhance. Again, remember, you're looking for this mechanical trading model. So things that are going to enhance that mechanical approach. You want to detail those takeaways and potentially go away and test them, then add them into your model, and then maybe some things that you can subtract. So simplification is also key. So methodical, mechanical, simplified. That's what you're striving for in terms of your trading model. If you can stick to those things, then you will find a distinct edge in the market that you can repeat consistently time and time again. Okay, so detail your takeaways, and that will complete your weekly price action review. So I do apologize for sort of the quiet moments and stuff, thinking and sort of like the going backwards and forwards. But again, I want to captivate the thought process. It's not just how everyone seems to promote on social media of, everything was detailed methodically without even questionable thought or anything of that nature. No, there's things that you forget, there's things that you need to just go and take a double look at, and so on and so forth. And that is the art of how you will carry out your weekly price action reviews and also your daily price action reviews. The daily ones will be coming soon. Just need to sort out timings of when I'm going to do those and that sort of thing. But it's important for me to provide a real look at how this is done, because I don't want people to have false pretenses that if I was to present this, precise, accurate first stab recording of this weekly price action review, you take that away and think, oh, that's how mine should be. No, this is the raw format. This is how you think through these types of processes and how you improve, how you have critical thinking, questioning the things that you've done, and how you get aha moments just by reenacting the process of annotating the charts and detailing the observations that you have. So hopefully you found this extremely useful. These are going to continue to be the foundation of how these weekly price action reviews work. Hopefully you found it useful. And yeah, with that, I will bid you good day, and I will catch you guys in the next one.